I want to end talking about China today because we have a huge winner. You look at all the ETF winners, it's all China this year. Check out the returns of some of these big China ETFs. FXI, this is the big one out there, large cap ETF, up 16%. MSCI, MCHI, pretty broad one, that's up more than 20%. Then there's the WisdomTree, WCHN, up nearly 30%. Let's bring in the man behind the WisdomTree ETFs, Jeremy Schwartz, to talk a little bit about that. And Jeremy, you have a slightly different way of constructing your indexes. In the case of China, what's in it? I know there's issues about, are you on the mainland, are you in Hong Kong, or the US-based China stocks? What's in this and how do you weight it?
So WCHN is one of the first ETFs WisdomTree launched that is really a pure beta play. WisdomTree is all about modern alpha and trying to deliver excess returns. China, being able to access the full range of securities is a form of modern alpha. You had one ETF that was 50 stocks. It's not any of the new tech sector companies like the Alibabas and the Tencents. It didn't have any of the A shares. And MSCI is starting to slowly add A shares. But if you get a full range, WCHN is 50% A shares, which is a very different look than the MSCI China, and so we think it's just a better beta security. It is a cap-weighted security.
It's got the word S&P in it, so you brought in Standard & Poor's to help you out. What did they do? Did they help you pick this? What's in it, or what's their role?
The S&P 500 is one of the most popular brand indexes around, and this was an opportunity. There hadn't been a pure beta total market solution, so WisdomTree in this case partnered with S&P to launch the S&P China 500.
And do you think this is, Dave and I talk about this all the time, what's the fair way to break down China? What kind of ETF that fairly represents the Chinese market? You got a little US based, you got a little Hong Kong based, we got some old companies, but the guys who are in Shenzhen, they're the NASDAQ people, they're young startups. So how do you break that whole thing down and decide on an index?
And you can see there was a very big difference. It was basically over 10 percentage points for just being beta for China, right? So what is beta? This is, we think, the broadest beta solution in the marketplace today. So that was the unique innovation behind it.
Reggie, is it the broadest beta solution? I mean, how do you do this fairly so that you capture what's going on in China?
I think how I think about this ETF is more the new economy China ETF, where some of the faster growers, and from a liquidity standpoint, we can trade it pretty deeply. And so from a structure standpoint, I think investors should pay attention.
I would note, the Shanghai is up 30% this year, and you're close to tracking that. I don't know if that historically would happen necessarily, but you're closer to tracking what's going on there.
It's half A shares, and then it's half the rest between the U.S., which is getting bigger shares as those tech companies get bigger weights, and also the Hong Kong listed.
Yeah. Dave?
Yeah, so I think this is absolutely the way to play all of China all at once. There are a couple of other interesting ways to slice this. Another one of their funds excludes state-owned enterprises, and I think that's a really interesting, that's CXSE. I think I got the ticker right there. That's actually beating this by about 4% so far this year. It's just removing those companies that are really just arms of the Chinese government. That ex-state-owned approach has worked in China, it's worked in emerging markets, and I think that's one of the more interesting developments we've seen.
Yeah, what I want to see is less state-owned enterprises, SOEs. Right. Propped up, government-owned banks and big industrials. You want the more entrepreneurial startup companies. I want more of them in an index, not the old state-owned enterprises.
Right.
This was an example where there hadn't been anyone who had ever created that kind of exposure. There's still very few places you could even get that information. We had to create our own database. And for the main China ETF, it was 75-80% state-run banks and energy. This was a very different exposure. And really for 30% of all emerging markets have this. So XSOE is the broad one, but CXSE is one of our favorite ETFs.
I just want a slightly different topic because your stock is publicly traded and you're one of the very few pure play ETFs that you can actually sit out there. And one of the things that happened we saw last year with that was it dropped rather noticeably. I think largely because of the fee wars that are going on. I don't know what your thoughts are on this, but how do you feel about where we are in the fee wars? So Dave and I have always been saying this is the year 2019 we're going to say enough with 2 basis points lower, and we're going to make a big story because somebody charges 2 basis points, Vanguard does, and iShares don't.
Enough.
And enough of it already. But your stock was obviously heard about on the fee war issue.
I mean, from one perspective, we've been with fees since we started. So the first ETF was launched at 9 basis points, and it wasn't going to get really much better than that. So WisdomTree was created with the idea that you had to be better than beta. We had to add excess returns. We call it modern alpha, strategic beta, factor investing, all these words. But you had to do something better. And now if you zoom out from WisdomTree, in 2013 we're about 18 billion of assets. Today we're 60 billion of assets. So it's really been a great 5-year trend. We had some very popular ETFs in 2013 and 2015 that the currency hedge, those have come down. But if you zoom out, we've done really well from the long term, and you do have to be better than beta.
You still have that problem with the fact that top 5 guys still get amassing ridiculous amounts of the overall asset base. You've had a number of big winners. It's just difficult to continue to gather assets here.